if I make this bigger, there's going to be a lot of scrolling, which I suppose is okay. Your eyes might get tired. So, actually, let me do this. So that is the format. Do you see how the format's set up? So you have the accounts along the left, right, up and down. In the accounts, so we're on what, 10-5? So 10-5 is on 437. So the initial accounts, right, the first piece it says for 10-5, problem 10-5, it says the statement of net position amounts at June 30th, 2007. You're given those. Right? In the problem on 437, you're given those. At the top of page 437. So this first column here, this trial balance, June 30th, 2007, you already have that information. So that's your starting point. It's asking you to put that down as your starting point. And then build other columns that show the transactions and closing entries, right, the changes. And then a final column, post-closing trial balance. Okay? Does that make sense in concept?
Concept.
Well, that's where we're going to start, right? In concept. So you have starting point is number 1. Secondary point, the transactions and the closing entry, the changes, right, is column 2. Then in column 3, you're going to add them together and come up with your post-closing trial balance. Right? I'm sure you've done this type of analysis before, probably not in this specific setup, although maybe. Right? But you've done this type of analysis. Okay? So, in this first column, you have debits and credits on a trial balance, right? You're copying the information from the top of 437. So your debits should equal 60 million, your credits should equal 60 million, just like on the top of 437. That make sense? Okay. Then you're asked to show all the transactions that happened. I am going to freeze this so that you can see the last column. Oh, yeah. Yeah, I'm gonna show it to you. So this is post-closing trial balance. That's your number 3. Right? And those are A, 1, 2, and 3. That's why I numbered them that way. Okay? And that's just going to be the sum of all the activity. Yes,
Are you
sir?
going to hold us if we set it up like the book? So the book starts with the transactions, then goes to pre, then goes to closing.
Yeah, and that's why I said it's only the template that you can follow for that. Because it's easier if you start with the trial balance and then if you do it this way. I think it's going to be clearer to you than what they show on 102 and 103. Okay, it's the same, it's the general layout, but I would set it up this way. Okay. Okay, so first column, we got that? Does that make sense? Whether or not you've got it all down yet, that part you have, so you can go back to that. But that makes sense where we're getting the numbers, where they're going. Yes? Okay. Second column, or set of columns, I guess. Because you're going to have a debit and credit. And I've numbered them. If you want to number them, that's fine. If you don't, that's fine too. I'm going to know whether you got the numbers right. Okay? Based on your final balance. So, these are the transactions. Let's go through the transactions. We'll walk through the transactions. These are the same types of transactions as on 11.5. Same general setup as on 11.5. Okay? So let's spend some time on this. We'll do our best to get to 11.5. Depends partially on how long we spend here. Okay? Okay, so you've got the trial balance. Let's assume that. Got that on your spreadsheet. Now we go down to the transactions. Number 1, sales of electric energy, 10,700,000. Okay? Think, what entry would you make? What do you think you would make?
Well, it'd be like revenues.
Okay?
And
Revenues on the credit side and
accounts receivable.
accounts receivable,
on the-
okay, on the debit side, right?
Yeah.
Perfect. So, due from customers is accounts receivable, right? You have a debit of 10,700,000.
All right.
Then, you're not going to have, right, you don't have a revenue account, so you're going to make, underneath the net position, you're going to make a revenue account.
Oh.
Okay? And you credit the revenue. Right? Yes?
I just want to get mine set up.
Sure. So you also don't have the expenses, so you're going to have to add any expenses, right, that you get during these transactions down here on the bottom. Okay? Because in your trial balance, you're only given assets, liability, and net position.
Can I see what the headings are at the top?
Sure. You sure can. So, first, I have my trial balance. And these are my accounts that I'm given. So I know that cash and investments with the city treasurer is 2.25 million. Okay? So in my first set of debit and credit columns, I'm just copying out of the book to give me a base. Right? My starting numbers. Then I'm going to record my transactions under the columns that are headed transaction and closing entries. Right? Then I'm going to add those together and I'll end up with a post-closing trial balance or a final trial balance, or however you want to say it. Yes, sir.
I was going to say, you're not doing the BBs like they have in the books, so don't skip that part too, where they have a beginning balance in the transaction.
Oh, no, I didn't.
Okay.
No, I didn't. And again, if you want to include these numbers, I might suggest it might help, right? But I'm not. If you gave me something without those numbers, as long as your balance gets there, that's okay with me.
What beginning numbers are?
The numbers for
The numbers from the book.
transactions.
So for the cash account, we start with 2.25 million. That's on the top of 437. Okay, you see that trial balance there, Chris? So those are your starting numbers, right? Now I know I'm going to have transactions in my cash account. That's going to go in the second column. Then I'm going to add those across and eventually get a new trial balance, right? Okay. Do we have the setup clear enough? Okay. So, transaction 1, again, I debited my due from customers, and you're given this title in the trial balance, right? That's your accounts receivable, right? And you credit your revenue account, operating revenues, or you can call it sales of energy, you can call it sales. I don't really care. As long as you've got it on there. Okay, so that's transaction 1. And what I'm going to do is highlight these as we go. So I know we've talked about them. Okay? Second transaction. Purchases of fuel and operating supplies for $2,950,000. Where do you think that would go?
Operating expenses.
Assets,
Other current assets.
or should it go in other current assets?
Apparently.
If it becomes your inventory, right, then it would go in other current assets. How would we know that it's not an expense?
It's being used to generate revenue.
It hasn't been used yet, right? So it will become an expense, those supplies can become an expense as we use them to generate revenue, right? Okay? So for number 2, I have a debit to other current assets. And I have a credit to my payable. Okay? In the problem it says, on the bottom of 436, it says that disbursements are made by drawing warrants on the treasurer. Warrants, from back in your chapters, are in essence payables. Okay? You're putting in a request to the treasurer to pay that bill. Okay? That's why it's going in your payable here. Okay? Number 3.